First, I would like to take this opportunity to express my gratitude to all of you for taking time this morning as we unveil the inaugural edition of the State of the Banking Industry Report. This is a report that has been prepared by the Kenya Bankers Association Center for Research on Financial Markets and Policy that essentially seeks to accomplish two objectives. The first one is to contribute towards the understanding of the banking industry in a manner that is comprehensive, enough so that the insights speak to the various stakeholders in the banking sector. This is a deliberate endeavor in the report to ensure that the various aspects of the market, be they policy in nature, regulatory, business environment, and stakeholder expectations, are analyzed in a manner that recognizes the extent to which they are linked. And then two is also to build on the comprehensive nature of the analysis so as to give perspectives of the banking sector's outlook. The outlook also points to analytical areas that the Kenya Bankers Association Research Center is currently looking at with a view to seeing how it will shape the understanding of the banking industry going forward. The report that you're unveiling is in many aspects an opportunity to look back and see our recent evolution as an industry. That's deliberate because the state of the banking industry is not a point-in-time assessment. That's why in this report, the journey of assessment goes as far back as 15 years, the period over which we have assembled a rich information set. So the various background studies as published in the KBA Center for Research on Financial Markets and Policy Working Paper Series. The background studies that are cited in the State of the Banking Industry report may be familiar to you, given that you may have them at the different times of their publication. The value addition of the approach of the report we are releasing today is that such studies have been assembled in a manner that allows us to see how they collectively inform our understanding of the banking industry. I suspect I have motivated in you the eagerness to listen to the details of the report as will be presented shortly. If I have not, I'm sorry. But at the risk of being preemptive of that, let me highlight a few aspects of the report that I consider to be key takeaways. One, a stable banking system is very critical for the development of our economy. As we report, the banking industry is on a solid footing. We have a banking system that is deeply embedded in the economy, with the outstanding loans and advances at about 2.3 trillion. And this is equivalent to 52% of the economy's real output, based on the data as at the end of 2018. Two, we have a dynamic industry that is able to respond to the need of the market in a manner that balances risks and opportunities. The regulatory environment is supportive of such dynamism in a manner that supports market stability. Three, the banking industry is at the frontier in embracing technology, both as a way of enhancing intermediation, efficiency, and growth, as well as regulatory compliance. Four, even as we see all the positive strides the banking industry is making, we recognize the challenges it faces that makes its operations be at below full potential. We have seen the level of non-performing loans steadily increase in the last 4 years. This has been on the back of the limitations that the Banking Amendment Act of 2016 that introduced lending caps. Five, we see the competition dynamics in the market fast evolve in a manner that is shaped by the market structure, where banks are positioning themselves to increase their market share, either on the back of organic growth or through mergers and acquisitions. This is a sign of vibrancy and progress in the direction of further industry deepening. As we ponder and deliberate on these issues, let me make emphasis that the banking industry remains critical to our country's progress. The role that will continue playing in supporting the SMEs will remain critical. That's why, for instance, we are championing the Inuka SME program, which continues to facilitate credit access through capacity building. As we do so, we have seen banks increasingly develop strategies aimed at enabling Wanjiku to access credit through training and subsidized loans. As an industry, however, we firmly believe that a risk-based pricing framework is one of the ways that will support resolving credit constraints that the capped credit pricing has imposed. As we work with various stakeholders in the public and private sector to come up with a framework that will enhance access to credit for all sectors of the economy, we hope that the capping law will be reviewed to enable the economy to accrue the benefits of a vibrant banking industry. Ladies and gentlemen, in conclusion, I would like to thank our members, various analysts, and academic researchers for the comments and suggestions that have been incorporated in this report. We look forward to collaborations that will facilitate more research and that will benefit the industry going forward.